Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A key reversal up yesterday, seemingly based around the April 2020 low at 107.25. The sine wave type activity of this market since the start of the year seems to be reaching a trough, though there might still be room on the downside to reach the 2020 low at 106.35 or even the April 2017 low at 105.68, which managed so well to slow the decline and turn the market upwards back in late February and early March. The only issue with this is that this time we have not just the short medium moving average overhead, currently at 108.87, but also the medium moving average overhead, this time currently at 108.13. On the converse side, we have the long moving average, currently 104.98, rising up into the frame, moving up through the February and March low from 2017 at 104.92. This low also held back in February and March, as well as the start of January, where it was particularly effective. Overall, there's the possibility of a February to date bull channel here, but it's still very early on in this idea, so I've not detailed it in any definitive way as yet. Now, so far today, countering a bearish opening black Mariposa, or so it seems right now, though it is early. It is worth noting that we do not have that much support below until the 2020 low at 106.35. Cable, aka sterling against the US dollar. A key reversal up yesterday, which I think was a bit of an over-dramatized response to the previous session's indecisive spinning top. The market seemingly caught this week in between a combination below the flatlining medium moving average, currently 122.94, plus the 50% Fibonacci line of the June 2021 to September 22 move at 123.16. And then on the top side by the slowly rising short medium moving average, though this top side does look a little susceptible right now. Overall, the market has finished its move up from the February to early March descending wedge pattern and is now in a zone between the previously mentioned medium moving average and the 50% Fibonacci line support combination below, and the combination overhead of the September 2020 low at 126.72 and the 50% Fibonacci line, the June 2016 to September 2022 move at 126.99. Now, there is also the possibility of a bull channel here, as in euro-dollar, but it's less distinct. Just less distinct. Now, so far today, a reaction move back down, looking like a possible immediate countering bearish harami, if only just. Euro sterling. A third bearish black crow yesterday, and a continued follow-on lower to last Friday's bearish below the stomach pattern. It was, however, the lowest low since mid-December 2022. We have a possible bear channel for this market, though it is one that is imperfect, having been breached on the top side and dating from only early April to date. And that's currently 81 to 86.25. I have not highlighted it on my daily chart, not yet. This brings me to the next support below, which is the March 22 to date uptrend, currently at 86.16. And in my opinion, not that strong a support. Instead, I would look for the closes and lows from October, November and December last year, down around the 85.80 area, as perhaps being a better region of support. And so far today, a further move lower, but only making a new recent low by one tick right now. It all depends on the strength of that lower bear channel line, and also the March 2022 today uptrend. US dollar against the Indian rupee. A bullish engulfing pattern and bullish opening white Mariposa yesterday, which was a bit of an overreaction, as the previous session was an indecisive spinning top. The main feature here is not the October 22 to January 2023 mildly bearish shift picture highlighted in green, which the market's having difficulties in pushing up over the upper time, currently at 82.57. Nor is it the ascending triangle formed between January to March, highlighted in dark blue, and which the market is having difficulties in interpreting. No, it's not that either. It is last week's bow tie formation of the short moving average, currently at 82.45, the short medium moving average, currently 82.17, and the medium moving average, currently 82.17. This triple crossover sets up the opportunity for a move higher, as the moving averages went in and out of the bow tie in the right order and are mainly pointing higher. Additionally, between 20 to 25 sessions after the crossover, we may see a move in the direction of the bow tie as well. Thus, between the 20th and 27th of June, look out for such a move. At the moment, the top side is capped by the extension of the upper trend line of the ascending triangle, currently at 82.96, with the October 22 high at 83.26 as resistance beyond that. Meanwhile below, well, the upper tine of the mildly bearish shift pitchfork provides immediate support, and the coincidence of the short medium and the medium moving averages, both at 82.17, seems a suitable support further down. So far today, well, the market seems to be utilizing the upper tine as a base for today, but is limiting itself in attempts higher, staying still within yesterday's high, mainly yesterday's range as well. US dollar against the Brazilian real. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's counter to the counter bullish harami. The most interesting feature was the push up through the overhead descending short medium moving average, currently at 503.68. The first time prices had been over this moving average since late March. However, prices were not able to exploit the move, closing ever so slightly below the moving average. Overall, this market is still above the middle tine, currently at 488.87, and below the upper tine, currently 511.89, of the broken late July to late September 2022 bearish shift pitchfork. This pitchfork is highlighted in dark blue on my daily chart. We're also still within the November 22 to date bear channel, currently at 483.74 to 532.37, which is highlighted in bright red on my daily chart. Even now, after all this time, sitting over all of this is still the shadow of the monthly key reversal down we saw back in January. US dollar against the Mexican peso. A bullish engulfing pattern yesterday, which was very interesting as it followed on from the previous session's hammer pattern. Below we have support at the August 2017 low at 1756.93 and the July 2017 low at 1743.62. Further down we have further congestion down at the March 2016 low at 1709.23 and the April 2016 low at 1703.89. However, the key to all that has been going on and highlighted in dark blue on my daily chart is still the September 22 to date bear channel, currently 1734.60 to 1854.29. This bear channel has acted superbly in showing the way lower. The only feature which is highlighted in purple on my daily chart is the neckline, currently at 1771.81 of the February to April 2021 head and shoulders top. This one has been running as a bearish declining support since March, but it seems to be giving up that idea now. It's worth watching, as it may eventually turn into resistance. Above that, we have the declining short medium moving average, currently 1799.29, as the next resistance. Now, so far today, a small attempt higher, and we are seeing here that neckline that I mentioned now acting as resistance today.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.